This is part 3 of my Section 6055 and 6056 reporting, where we're going to cover Section 6056 for large employers. It seems simple enough to say that if you're over 50 employees, you're subject to this reporting. But even if you're under 50 employees, you still need to consider things like your part-time employees and whether they add up to how many full-time equivalents, your seasonal workers, if they're going to count or not. And then if you are part of a control group that includes any other sister organizations, whether combined you meet the 50 employee requirement, which will compel you to report separately for 6056. Regardless of what your company's definition of a full-time employee is, for the Section 6056 reporting, it's going to be based on 30 hours of service. So you need to count up how many employees regularly work 30 hours or more a week. Then you need to consider your part-time employees. You're going to essentially add up all the hours that are worked by part-time employees in a month, divide it by 120, and then you get the number of full-time equivalents that you employ. You add the two together, and that comes up with the number of full-time employees at your group. Employers with 50 to 99 employees got a 1-year delay on the employer mandate portion of the law in 2015. However, they'll still be required to report under Section 6056. They'll also need to certify the following 3 statements shown at the bottom of this slide, essentially to verify they're not trying to game the system. If you listen to part 2 of my series on 6055, you'll find 6056 sounds very similar. So the 1094C is going to provide the employer level data, summary information, and serve as a cover sheet to attach the 1095Cs. The 1095s are the employee level forms that you'll have to provide for each employee. So to meet the minimum value provision, plan essentially has to be a bronze level plan or better. So it's going to ask all your contact information as a group, number of 1095s you're submitting with the transmittal. It's going to ask if this is the authoritative transmission, and it's going to ask if you're part of a control group of any other employers. And then finally, it's going to ask you to certify that you offered minimal essential coverage for all 12 months of the year. The trouble starts with the 1095C, as you'll need to complete one of these for each employee. It's going to provide all their information, name, social security number, address, and who you are as an employer that's offering the coverage. Part 2 asks you to certify that you offered minimal essential coverage to each employee on a month-by-month basis, including whether the offer was just for them and a dependent, and a spouse. Finally, you'll need to list the employee's cost for the lowest minimum value coverage offered by the employer. They're going to use that information to compare with the employee's W-2 to make sure that you're offering affordable coverage. You'll also indicate here if any safe harbors apply. So Part 3 only needs to be completed by self-funded groups. And the reason for that is this part of the form is actually verifying that an individual is covered, and the IRS will use this to verify that they've met the individual mandate so they don't get taxed as an individual at the end of the year. So here you'll need to list each individual that was covered under the plan and indicate on a month-by-month basis whether they were covered. So as an example, Company B is a large employer, has 89 employees. Mary is a full-time employee at Company B and was offered affordable coverage for herself and her family for the full 2014 calendar year, and she enrolled herself in that plan from January 1st, 2014 through the remainder of the year. So again, the 1094C, it asks for all the employer information and serves as a transmittal sheet for the 1095Cs. So you'll see they indicate there are going to be 40 1095s accompanying this form. So here on Part 3, they show that for all 12 months, they had a total employee count of 89, including full-time equivalents, and that they offered coverage to their 40 full-time employees. So this is Mary's 1095C, one of 40 that this employer will have to submit. Part 1 gives all the employee information, and then Part 2 indicates that Mary was offered coverage for all 12 months, that the cost for the lowest minimum value plan offered by this employer was $80, and 2C indicates that Mary elected coverage for the full 12 months. Now, there are several ways to report the information. What we described up to now was the general method of reporting. However, there are a couple of alternate methods that might save you a little bit of time in the reporting process. So under the general method that we described up to now, an employer is reporting information about health coverage offered to their full-time employees. For each full-time employee, the large employer has to report whether an offer of health coverage was made to the employee and an offer was made, the requested information about the offer, what the costs were. And then each employee needs to be provided a 1095-C. They don't have to get a 1094-C. So the qualifying offer method can be used when you've offered employees minimal essential coverage that's affordable based on the federal poverty line. So in other words, if you're charging a low enough amount for single coverage that it's going to be affordable for everyone above the federal poverty line, then on the 1095-Cs, you're not going to be asked for the cost information, so it might save you a little bit of time. You can only do this, though, if you're offering that affordable coverage for all 12 months for that particular employee. If you're not doing it for all 12 months, you're back to the general method of identifying each month that an offer was made and what the cost was associated with that offer. So on the 1094-C, the employer form, they check off that they're using a qualifying offer method. And then when they do the employee form, they use code 1A to show that that employee has been offered a qualifying offer for all 12 months. So for 2015, there's some transition relief to the qualifying offer for employers that have made qualifying offers to at least 95% of their employees. And as long as you've done that for 95% of your employees, and you don't have to go back to the general method for the few employees that weren't made qualifying offers. Now, for those employees that have not been made qualifying offers for all 12 months, you will need to indicate on a month-by-month basis what months they were and weren't offered a qualifying offer of coverage. And the IRS will use that to determine an individual's eligibility for a subsidy under the marketplace. So here we see on the employer's 1094, they check off qualifying method with the transition model. And then on the employee's 1095, they indicate code 1I for all the months they did not receive a qualifying offer, and code 1A for each month in which a qualifying offer was received. So the 98% offer method basically says that if you've offered affordable bronze level coverage to at least 98% of your employees and dependents, that you don't have to fill out on the 1094 the section that asks for month-by-month number of full-time employees. However, you're still going to be required to fill out a 1095-C for each full-time employee. So it's questionable how much simplified this 98% offer method is, but it's there. So if you actually made it to the end of all three parts of this series, I congratulate you. It's a lot to digest. And if there's one key takeaway I think you should have, it's that most employers are going to need outside assistance completing this reporting. There are lots of vendors out there that'll use technology and pull data from your payroll and your benefit companies in order to produce these reports. For assistance tackling this project, you can contact me, leave a comment below, or contact me by email, jeff@kuntzicg.com.